Hi friends, in this video we'll see a comparison between SLM method and the WDV method. The straight line method is more suitable for assets like building, we can say assets which generally do not lose their value due to usage. We can say softwares, etc. Now, assets like building, we'll take an example of a building. Let us say the value of the building is 1 crore rupees and it has a life of 50 years and estimated scrap value is negligible. So the original cost is 1 crore. Estimated scrap value we are estimating at 0 after 50 years. So life of the asset is 50 years. So there will be a charge of 2 lakh rupees every year. Now if you see the impact of in the P&L account, there can be two impacts. We can say depreciation and some repairs total. Every year the depreciation amount will remain the same, 2 lakh rupees, 2 lakh rupees, 2 lakh rupees every year, because it is straight line method we are following. Repairs, maybe initial years the repairs will be negligible. Maybe after 3 years of life you may spend 50,000 rupees or 1 lakh rupees on the painting or some small repairs of the building. And again maybe again 2 to 3 years you may not have any expenditure, and then maybe after 3-4 years you may again have some expenditure which will be incurring. Say it will be about 1 lakh rupees again for painting and repairs, etc. So more or less on the P&L account there is a constant charge. Yes, there are some bumps in between when there are some repairs, but generally there is a constant charge to the profit and loss account. And this constant charge, that means debit to the P&L account, is representative of the usage. Let us say we are doing the business in the same way every year, then the debit to the P&L account should also be the same. So it is representative. Okay, so for assets where repairs are negligible or repairs are very less when compared to the original cost of the asset, in such assets and the assets where the option is not based on usage, in such assets we can use the SLM method of depreciation. But in the case of a machinery, if you have a similar table which we prepare, depreciation, repairs, total charge to P&L account. Let us say depreciation is 10 lakhs for the first year. Second year it reduces to 9 lakh because we are following WDV method. Third year it reduces to 8 lakh further. Fourth year it reduces to 7 lakhs. Fifth year it reduces to 6 lakhs. So and so forth. It keeps reducing. Repairs, when the machine is new, generally when your car is new, when your machines are new, generally repairs are nil. But after 1 year you have to start incurring some expenditure on maintenance, repairs, repairing some parts, replacing some worn out parts. Second year it is going to increase further. As the machine becomes old, the repairs are bound to increase. So these are just hypothetical numbers, examples. So here I am keeping the depreciation, I am reducing the depreciation every year, whereas I am increasing the depreciation, the repairs every year. So if you observe, the total impact would be 10 lakhs, 10 lakhs, 10 lakhs, 10 lakhs, 10 lakhs. So this is also creating a constant charge to the profit and loss account. If the business is carried on in the same way, if we are in normal course of business over a long period of time, if you observe the business is carried on more or less on the same level of capacity, then this method is generating a constant charge to the profit and loss account. That is why for machinery, written down value method becomes more suitable. Where repairs are significant, WDV method is more suitable of charging the depreciation amount. If the life can be measured in terms of number of machine hours, in such cases, if you know the usage of the machine in the number of hours, then definitely you can follow the machine hour rate method. So this was a small comparison of the methods of depreciation and its impact on the profit and loss account. So we said in case of assets where the usage does not have a much impact on depreciation, where the value is lost due to efflection of time, not due to usage. So, and repairs are negligible. In such assets, SLM method is more suitable. In the case of assets where the repairs are more, in such cases, it is better to follow the WDV method, because even though the initial depreciation is high, but because repairs are low, the impact on the P&L account is, we can say, constant. As you observe, in the future years, the depreciation reduces, but correspondingly repairs increase. So having a, we can say, balancing impact on the profit and loss account. So for assets where the value is lost due to usage and when there are significant repairs, it is better to follow the WDV method of depreciation.